This is Aaron Levine, LG Insurance, with another episode of the And Insurance Podcast, hanging out with my good friend, Adam Lepore from U.S. Bank, mortgage lender extraordinaire. He's got some cool stuff to share with us. Yes, we're going to talk about the market, but there's some interesting products in this market right now that I think everybody needs to know about and could be very valuable for you as a homeowner or an investor. And I think it's going to be very cool to get into it. Especially there was a little downtick in mortgage rates this week, so everybody's all happy to go buy houses and stuff.
Absolutely, so, cool, man. Aaron, thanks for having me.
Do you guys jump up and down when rates start going down?
It does get exciting. Yes, yes.
Balloons and streamers and all of that.
No, it is. It is a little joyous around the office and in general in the marketplace. So
changes the morale a little bit.
It does change the morale. It does seem as though things are on the other side of the mountain. So that's good. God. That's always a good thing to see.
I'm ready to refinance.
Well, there will
it's got a long way to go before it's going to be a number where I am, but
there will be candidates, and
right.
I think like anything else, if there's a need to buy, it's still a great investment, even when rates were as high as they were, and there are solutions for people, at the time, obviously, and then going forward to refinance or do whatever you need to do. So. Right. Yeah, so I think sometimes you have some people that were certainly scared away, but
sure.
At the end of the day, there's a need there, number one, and a lot of times there's you look at it and it's really still a great investment.
Right.
I mean, the property values are not depreciating. Thank God. Yeah, especially in our area. As I'm also looking for a new home, so right. I'm still. I'm seeing it firsthand. So
man, money across the board is just expensive, right? Money is.
It feels that way,
and I see small businesses being affected significantly by the cost of money because
sure.
rents are way up.
Yeah.
Right. Cost of goods sold is way up.
Yeah.
Insurance costs are up. Sorry, I really don't make the rates. And cost of money. So cost of money is affecting everybody in the supply chain.
Absolutely. And
the end result, we're paying $25 for an order of chicken wings.
Yeah, I know. And then no more 10-cent wing nights at some of the places I used to go to.
Hopefully somebody will come back, but it's never going to come back. It's never going to get that cheap again.
No, it is a factor. It is, in discussing with folks, and I end up doing a lot of deals with some maybe higher end clientele, and a lot of times in the past they wouldn't bash an eye at paying 3 or 4 or 5%,
right.
even if they had the cash, because it was so cheap. And,
sure.
I'd have clients on the other side of things, who would talk to me about, should I pay my mortgage down? And I'm saying, you're never going to see 2.75
right.
or whatever
right.
that you see with friends. So why, there's no reason really to pay it.
At that rate, put your money in a CD. And that's the other benefit of expensive money. If you have the money to save it, there's great opportunities on the other side of the fence.
Yeah, you're seeing the advertisements now are huge now.
Whereas I love my CD accounts right
yes.
now. I don't have to think about them like the investment accounts and worry about what the stock market's going to do or anything else. But they just, 5% for a 12-month CD and just forget about it.
Yeah.
As long as you can forget about the money for a period of time, it's phenomenal.
I feel like the banks now are like having plastered over like everywhere in the branch now, because like now it is the rates are so good now. Whereas before it was like, oh yeah, we have a CD, but here's the rate, and they would
right.
flip you like a little piece of paper. Like, you sure is this what you want?
0.001%.
Yeah, exactly.
So what attracted you to the mortgage industry? Right, you've been in the game for 15 years plus.
Yeah, since
now.
About 15 years, 2009.
Okay.
I actually got in right after the recession there into late 2008.
So you started in a hard market.
I did start in a really hard market. Yeah. So my background is I'm second generation. So
okay.
my father's been in the business, who knows now, 40 years, forever. So I always liked kind of his deal. He was we weren't rich by any means growing up, but we lived pretty well. I also liked the idea that he was able to always kind of attend my games, my hockey
right.
games, or whatever we needed to do. He had that flexibility
freedom.
To do that, freedom. So I like that. So when I was coming out of school, when I was coming out of college, I was kind of like banging down the door. And this is,
right.
You're talking 2004, 2005, and the market was really crazy at that
mm-hmm.
point. That's when you were hearing, the option arms and the all sorts of can't even think of it right now off the top of my head, but you know, all those crazy subprime,
Right.
Yeah, those subprime mortgages and things of that nature. So the market was really crazy, and my dad actually kind of pushed back and said, you know, maybe now's not the time to get in. It's a little bit nutty. I don't know really where the market's going to go.
Sure.
And of course, as it happened, you know, we hit that big recession, and that recession was driven by, you know, the by housing,
Right.
and how inflated housing got in comparison to, you know, how people could qualify for homes. So eventually, my dad had been at Wells, and they were taking over Wachovia. That's an old name. So they were taking, they were taking over Wachovia, and they were going to have a branch presence. And he said to me, and I'll never forget this, he goes, rates are below 5% now. And that's the first time it's been like that. And,
Right.
you know, almost his whole career. So he knew that there was going to be a huge refi opportunity there. So the time was right, and you know, I jumped on, like I said, in April of 2009. I jumped into the business. I started at Wells, and yeah, it was difficult from a purchase standpoint at that point. A lot of short sales,
Right.
You know, the agents that I was meeting, you know, they were kind of gloom and doom because it wasn't moving as quickly as it was, which now it's funny because we're kind of back there, but
Right.
But for different reasons. But I really like the idea of helping people, as I'm sure you know you do as well in your line of business. So that's really, it all kind of came full circle,
Right.
and here I am now. So
Yeah. So I opened the doors of the insurance office in 2009. I think it was February of 09 is when I really got rolling. I incorporated in 07 while I was in graduate school. Once I got out of graduate school, then I was trying to figure out what to do next. And, you know, unfortunately I had to get out of the windmill business. Yeah. And then, so it was right in that same time of, you know, I was actually doing real estate also at the time, and that was just not going very well. So I'm like, everybody needs insurance. They're forced by their landlord or their bank or the government to purchase it.
Yeah,
like,
absolutely.
It's a commodity.
Yeah, absolutely.
It's easy to sell a commodity because all you have to do is have good pricing and create some good relationships. And that's how I was able to start the business. Right. And now, you know, we've transformed the business significantly, and now we're focusing on our new slogan, the Who You Work With Matters.
There you go.
The Who You Work With Matters slogan is really what we're focused on, because it's really about the people around us.
Absolutely.
Right. It's connecting with the right clients, connecting with the right professionals and advisors. You know, in everything that we do, I want to hire the right experts.
Sure.
To do the work for me, because they're so much better at it than I am.
Yeah.
And I want to make sure that we can be more efficient as a team and have everybody. So the Who You Works With Matters is, you know, is clutch in everything we're doing. Previously on our last drinkware set was a destination for all of your insurance needs, because we can insure almost anything.
Sure.
You know, and that's great and all, being that one-stop shop. But now I want to go and niche out and really focus on the people around us. So shout out to my brother for
Avi.
These new beautifully purple mugs. Avi, thank you. We'll tag you in the promo section, and I'll send you an invoice for it as well.
Yeah. Absolutely.
Although I haven't paid for the mugs yet, so maybe I'll get a discount. But anyway, you know, so really coming up in that same time frame.
Yeah, absolutely.
You know, it was definitely an interesting market. So you've been through a couple of different market cycles.
Yeah, absolutely.
We're in an interesting one now. We have been for the last couple of years. The boom that existed when interest rates were going into the threes with the refis and people being able to buy anything because money was so dirt cheap is 2 years gone now, it feels like, right? Or just about a year and a half gone.
Yeah, about a year and a half.
You know, so the market's changing again.
Yes.
And hopefully interest rates are just going to find a nice, comfortable home that people can buy and trade real estate.
Yeah.
Right?
Yeah.
That's
a great place.
Without being in fear.
Yeah, absolutely. It's a great way to put it. 100%.
So you said something before. You're like, we were never rich, but my dad was able to make it to all my games. The book I'm reading right now, 10X is better than 2X, is a Dan Sullivan concept, and talks about, you know, freedom of time.
Sure.
Right. Being in that space of getting your business to the level where you have freedom of time, freedom of choice, freedom of money. Like there's a lot of freedoms that you want to build in your business, in your career, and everything that we do. And,
Yeah.
you know, being able to do that is huge.
Yeah.
And you want to do the same thing for your kids. You know,
100%.
you're a hockey dad.
Yeah, 100%. Yeah, I am a hockey dad.
You know, I'm a professional chauffeur for my children.
Yes.
Like it's, you know, it's one of those great freedoms that we've been able to create. And I think
Yeah.
it's totally awesome.
Yeah, it's cool. And going back to that point, I mean, you know, a lot of people, even in a boastful way, you know, would say how great the market was, you know, right around COVID, and like we said, that what ended about a year and a half ago.
Right.
And yes, you know, from a material aspect of it, you know, we a lot of us in our industry made a lot of money during that time frame.
Yeah.
But I mean, I was told by, you know, the significant other in my house that, you know, I better take a day off. Otherwise, you know, there might be something else going on. You know, so I was overworked, and that affects your life as well and your health.
Sure.
So yes, finding that kind of that happy medium where you're doing what you need to do, you're growing your brand, you're growing your business, you're putting food on the table, but at the same time you have the time to be a person,
right?
You know, and to be a dad and that sort of thing. So yeah, that's extremely important, and that's what we're all working towards right now. Absolutely.
So when we had lunch a couple of weeks ago, we were talking about, you know, your focus right now, and you're working with some interesting products, right? So you've joined an organization and you've been able to really position yourself as an expert, right? As the go-to for this specific type of mortgage contract, right?
Yep.
Which I think is very cool. So you can do the traditional mortgage lending, but you have a niche, which I think is beyond awesome for anybody that's thinking about residential investments, that you can help people,
correct,
whether it's an investment or for their own secondary or primary homes,
correct,
to get into a new construction project.
Correct.
So tell me about what you're doing.
Yeah. So again, it kind of goes back to my history a little bit. When I was still at Wells, they had this product called the Construction and Permanent Mortgage.
Okay.
And you know, at the time, I had no idea what it was.
Right.
But you know, I was always, even at that point, looking for little niche things to get into. And you know, basically the way the product works is it's a single closed transaction where you can roll the cost of construction into a traditional mortgage.
Okay.
The payments during construction are interest only on the funds that you draw, and then once the project is completed on the home, then you can it automatically, I should say, rolls into a permanent mortgage.
Okay.
So it's, you know, the rate is all done up front, which
so
is
you don't
nice
have to
and
do
easy.
a second credit check.
Correct.
And a second application. Like
Correct.
once you're locked, you're locked.
Once you're locked, you're locked. Once the
That's
loan
awesome.
closes, everything's done. The money's there.
Right.
There's a lot of great checks and balances with when you're dealing with the builder as well. The builder has to hit milestones in order to get paid. But for the builder, it's great because they know the money is there.
Right.
There's
Okay.
no, you know, there's
So
no
the bank is
hassling.
controlling the funds for the most part.
Correct.
So
Through an inspector, you know, a third
Okay.
party inspector comes out and says, okay, you know, framing is done. We're going to pay out that line item. Or,
Right.
you know, windows are in. You know, we're going to pay out that line item, and so on and so forth. So that money accrues on a monthly basis, and like as I mentioned, the client pays interest on that.
Okay.
And then once the house is completed, as I mentioned, it just, you know, rolls into a regular mortgage. So
That's awesome.
so it's really good. So again, we have those. It has those inherent checks and balances.
Right.
So you don't get as many of the arguments over, you know, you said this was going to be this or this. You know, it's all laid out.
You have another set of eyes looking at it also, right?
Correct.
You and your team are watching the project essentially.
Absolutely.
And you have another set of eyes and expert eyes, so to speak, when it comes to these transactions.
Yeah, and even early in the transaction, when we first take the application, you know, we're reviewing the contract between the client and the builder.
Okay.
And, you know, you'd be surprised a lot of the contracts are not written very well.
No, really?
And yeah,
I would never guess, because I've never asked a contractor for a contract to see what they're actually doing or guaranteeing
yeah.
for their clients that they're building for when I'm trying to get them insurance, whether it's the homeowner or the contractor during a construction project.
Yeah, absolutely. So I think, and a lot of times, and again, in the past, I've talked to clients who could absolutely pay for these projects in cash.
Right.
But once they see kind of the due diligence that we do
Right.
on their behalf, essentially,
Right.
they really enjoy the opportunity to work with us.
You almost
and
become
do
like a
that.
sidelined construction manager,
Yeah.
so to speak,
Yeah.
in a way,
Yeah.
become a little bit of a consultant
Absolutely.
to help out with the transaction and make sure everything's
Absolutely.
going smoothly.
Plus, I've done so many transactions now that I could see things
Right.
that, maybe is there that maybe wasn't there for any specific reason, but may contradict something else in the contract, or
Right.
maybe a potential problem going forward. And, addressing everything up front kind of puts everyone's cards on the table.
Okay.
And I think that really helps the client feel at ease that not only are they going to be getting the house that they want, but
Right.
they're going to be getting it in a fashion in which there's less stress on how it's being paid for, and
Right.
what happens if there are cost overruns, and where are those cost overruns likely to happen.
Do you budget for that? Like,
There
that
is, yeah.
part of
We do try to, I don't want to say push, but we do recommend contingencies.
Right.
We do also recommend that, hey, if you're looking at allowance items, things like countertops, that, put in the allowance for the higher end
Right.
countertops. If you don't use that full amount, we're
Right.
not going to charge you for it.
Oh.
Or I should say that, the bank's not going to charge you interest on,
Right.
those
Okay.
funds because you didn't take it. So yeah, there's a lot of consultative discussion in that regard. So that's very important. And,
Right.
and again, it's something that the clients, they start to appreciate once you start to talk to them.
Right.
When they come to you, a lot of times they're the only transactions that they're familiar with are
Right.
either a normal mortgage transaction where they just say, oh, what's my rate, and what do you need, here's my W-2s,
Right.
here's what
Right.
and it, or if they're buying something else like a car or something. Again, it's very straightforward. With this, there's a lot of little nuances, and some of those nuances are going to be important in ensuring that the process goes smoothly.
Okay.
And understanding those nuances and really putting an emphasis on those to say, this is why we do this,
Yep.
is really eye-opening for the clients. And it does. It makes the process for them better
Right.
than even if they just paid cash.
Right.
So yeah, that's a great product. And then I moved over to US Bank in the summer, and the primary reason that I did that was because we also offer a pure lot loan.
Listen, if you're a realtor, listen up.
Yes,
to this,
yes.
because this is where your buyers are going to find the most benefit
Absolutely.
with working with Adam, and it's going to get you more deals closed, especially when it comes to land and construction residential projects. So this is the next 60 seconds of gold right here for all the realtors.
Ready? Go. Yeah. So the lot loan, it's not something that's offered out there in the marketplace. It's not very prevalent, I should say. And the good thing about our product is it's still a 30-year amortized product. It's an ARM. It's a 3-year ARM.
Right.
But so the client is not rushed into, okay, I'm going to get this lot loan, but then I got to turn around in 6 months or 12 months and have all my stuff together. Obviously, that's the intention.
Right.
But this allows them to really acquire the lot, allow them to really plan out exactly what they want to do with the lot. Maybe it is a longer term. Maybe it's a 5 or 10-year plan. But hey, we want to get this lot now because, as we know, everything's appreciating. Nothing's really depreciating. But really, in most scenarios, what it allows us to do is it allows us to take the client, and for agents, this is important, it allows us to take the client from lot acquisition through build. And now we're working with them through each one of those steps. So now if you have a client who's been looking at every house under the sun and doesn't like it or is getting outbid, now they can look at a piece of property and say, okay, I like the idea of maybe I can build my own house.
Right.
But how do I do it?
Right.
But how do I do it? So now this gives you the steps
Right.
to get through that whole process, so that whether it's 5 years down the road or whether you're trying to do this all in within a year or two,
Right.
at least you have a clear roadmap.
So does the lot have to be vacant, or the lot can have an existing structure on it?
It does have to be vacant for the
Okay.
pure lot loan, but
Okay.
if there's an existing structure on it, then we can have a totally different conversation about
Got it.
whether or not maybe we can acquire the property through traditional means, or
Okay.
and still do the construction loan.
Because there's
down
not
the
a lot
road.
of raw dirt sitting
There
around.
isn't a lot, but if you you know what though, you'd be surprised if
Yeah.
you do some research. And certain, like Ocean County's a little bit more
Okay.
robust with that than maybe Monmouth County is.
Right.
But yes, it is a little bit scarce.
Right.
But if you look around and you go on the websites like Realtor.com and Zillow,
Mm-hmm.
a lot of times all you see is the picture of the lot. There's no marketing.
Right.
There's very little discussion. There's maybe one sentence like, "Oh, build your dream home."
Sure.
Okay, but if you're a client, you have no idea
Right.
how you're going to get to that point. And I feel that a lot of the agents are missing opportunities on marketing
Sure.
because they don't know.
It's a great
how to do it.
education for buyer's agents, right
Correct.
now. I mean, what a tremendous. I'm like thinking right now, I'm like, where can I find a lot and
By the way, I have a 1 credit CE in order to teach that. Right?
Sponsored
So-
by LG Insurance.
Yeah, there you go. That's what
See? Let's do it. Happy
Yeah.
hour sponsored by me.
Exactly. Yeah. Let's put it on the books for January. We'll do that.
Yeah, absolutely. Why
So
not?
yeah,
Totally fun.
that's really, and it's not just for primary. Actually, a lot of the clients that I've been dealing with in both the construction, just the pure construction loan, and the lot to construction,
Right.
have been second homes.
Okay.
A lot of the baby boomer generation who, they have some money, they're kind of looking to maybe make a move or eventually make a move. Maybe it's a 5 year down the road. Hey, we want to maybe move a little bit farther south.
Mhm.
That's a lot what we're seeing right now, because they're the ones who have that availability to do.
And you're licensed to do this in what states?
in all 50 states.
All 50 states.
Another reason I moved to US Bank. I can
Okay.
do it in all 50 states. I mean, obviously, we grew up in this market.
Right.
That's where a lot of my business is, Monmouth and Ocean County. That's where a lot of my relationships are. But yeah, I could do.
Yeah, but it sounds like if somebody
moving
wants
to
to
South
build
Carolina or
their
Florida-
retirement home, this
Yeah.
is a great opportunity
Yeah.
because you have the relationship here, right? And then you can bring the expertise in
Yeah.
for,
Yeah.
something
absolutely.
south or west or wherever it may
Yeah,
be.
wherever,
Just
yeah.
be careful with the insurance costs if you're trying to move to Florida. Way too expensive unless it is new construction, then it's affordable. But the cost of construction in Florida is also probably worse than New Jersey.
At this
'Cause
point,
you're building with concrete and steel. You're not building with sticks.
that is true. Yeah, it is a lot of concrete out there. Absolutely. Yeah. Absolutely. So yeah, I mean, that's, and that's where, and also too, from a relationship standpoint, and we've talked about this a little bit, and we'll continue to do so. You're not just going to Geico for the insurance for this type of
Right.
for this type of work that you're going to be doing. You need a builder's risk policy, and you need general liability, and these are things that someone like you, as an expert, will be able to coach the client as to that piece of it as well. So same thing with title. Title is very specific. There's a lot of nuances as to title in these scenarios. So a lot of times we do rely on a good title partner that that knows this kind of
It
business.
takes a lot of people to build a house. I mean,
It sure does. It sure does.
from
Absolutely.
acquiring the lot and understanding the setbacks and hiring the right architect and the right
absolutely.
builder that's going to have the right subs. It's the who you work with matters
There
all,
you go.
all day
Perfect.
long, right?
Absolutely.
Being able to trust your contractor, like you said, those contracts between contractor and homeowner, are so misunderstood until something happens.
Yep.
And then it's too late.
Yeah.
Which we see it, right? So you gave me a perfect lead in on the insurance side of it. And we do a lot of vacant land insurance. And we insure vacant lots. They can't have a structure on them. We can insure structures, but again, similar to the mortgage, is a different type of policy.
Mhm.
But we want to insure the raw land for the 12 months while you're looking up plans and trying to figure things out.
Yep.
Because then we want to make sure that we can handle the builder's risk for you.
Yep.
And the liability. And then you're going to move into the house or put a tenant in it or flip it or do whatever. And we want to get that third insurance policy, right?
Yep.
So again, that's building that relationship. It's the building blocks from the dirt all the way to living in your home is great. And I love watching dirt go to sticks, go to a beautifully, well-maintained home and people living in it and happy. Like it's cool to watch.
Do you ever get a client send you pictures?
I do once in a while. Yeah,
I've never I try to get clients to do that.
I've never gotten invited in for pizza, but
Oh.
I do get pictures.
I have gotten that too, thankfully. That's been great. But I try to make it as personable as possible.
Right.
I mean, it is a transaction, but one of the reasons, and going back to how I started in the business, one of the things that I really have always enjoyed about this business is this is the most important thing in everybody's life,
right?
Is where they live. And the most rewarding thing is when it's a traditional transaction, a regular purchase, you're at the closing table and the handing over of the keys and you see the excitement there. And then
until they make their first mortgage payment and the washing machine breaks,
yes,
and your hot water heater goes. Mine went last week.
Oh no! Oh man!
So I'm like, being a tenant is so much better, but we don't talk about that in front of our mortgage friends.
But again, though, it's as much as you have that, you have the people who will send you the pictures of the progress, and,
right?
Or I got 2 years ago, I actually got a Christmas card.
Nice.
And again, it was a second home, but they went down and they took they took the family photo in front of the new home. It was great. It was pretty cool. It was surprising, but it was really cool.
It's nice to see, And so, and I see the nightmares too when people buy garbage insurance.
Sure.
Like we had one in Bradley Beach where it was a framed structure and then the house blew over. The homeowner apparently didn't purchase the right policy. Mine was too expensive. We actually quoted it, but I was too expensive. Mine would have paid the $150,000 worth of wood that needed to be reordered.
Yeah, sure.
Wow. And then another one, there was a fire recently on Ocean Avenue down in Seabright, and I get the call the next day, and the owner didn't have insurance on it. The damage was minor, so I think he got away with it.
Yeah.
But you're calling me 3 months too late.
Yes.
We'll try to help you after you make your repairs, but lesson learned.
Yeah.
He could have lost $500,000 because, the sides were up and, they were ready to put the roof on it.
Plus probably a little bit more expensive to get a new policy at that point.
It's going to cost him a fortune.
Yeah.
If and when we get around to doing it.
Yeah.
But I'm like, I want you to fix everything that was damaged before we talk about it again.
Of course, yeah.
I can't come in today and then you try to put a claim in on a fire damage that happened a week ago. Like that's just not it. It's taking those risks. It's not worth it because the claims are gonna happen and hopefully they never happen to you.
Yeah.
But having somebody checking on you and helping you understand that you need a good contract, you need to hold harmless. You need to make sure that they have liability and workers' compensation because you don't want to be on the hook when something goes wrong because you're going to lose everything at that point. So really having you guys in the homeowner's corner is great. And I think about it, if I were to build a house today, I don't have time to manage all this. I want somebody else managing it, right? I want a contractor and I want somebody managing the contractor, to make sure that my wife is happy with everything that's being picked out. And we're 50% above budget.
Absolutely. That's
those kind of things.
That's where you need those contingencies.
So where are we in the market today and what's 2024 look like for you and this product and the industry as a whole? What are you hearing?
I think like I said earlier in the conversation, I think we've turned a corner a little bit. I think I really find it hard to believe that we're gonna go backwards at this point.
Okay.
So I truly believe that rates will get into a range, like you said, that are going to be a little bit more comfortable. Probably somewhere in the high fives range is probably the best we'll see going forward. But that's manageable.
Right.
And I think, just like anything else, people have needs, and home ownership is a huge investment. It's your biggest investment, and furthermore, it's your most important thing in your life. Again, as I mentioned before,
right.
So I do see things starting to turn around a little bit. Our market is obviously very competitive. So, I think anyone who's waiting for house prices to come down, I think you're never, I don't think you're really
There's no way,
realistic there.
we're in such a conundrum when it comes to the inventory right now.
Absolutely. Yeah. It's tough. And that's where our product has always come in, the
Right.
construction loan product, because it helps create inventory.
Sure.
In that sense. But I think, as I've always advised people, if you love the home and you're comfortable with the monthly payment, then what's the problem?
Right.
That's
And
really what it
hopefully
comes
you get
down
to refinance.
Yeah, and hopefully you get to refinance. But I think it does change, and this is maybe a broader conversation. But I think what is happening now is starting to change the way we look at everything that we do financially. I think that stacking the deck and having this kind of what's the parachute, kind of golden parachute to kind of lay back in, where, oh well, my mortgage is only $2,500 a month.
Right.
Well, now you're going to have to go with the mindset of, hey, my mortgage might be closer to $3,500 or $4,000 a month, and how is that going to affect the other things that I do in life? And that's, I think, in a lot of ways that some people don't want to have those conversations to themselves. Maybe it costs you one extra vacation a year, or maybe it costs you a couple dinners during the year at Butcher's Block, but but yeah,
It used to be everything was always equated to Starbucks coffee. Now it's Butcher Block.
Yeah, exactly. But I mean, I think that's the reality. And again, it doesn't mean that those things aren't important. Right. Obviously, taking vacations are important, but I think just a little bit of a different mindset of, maybe I have to save for that vacation instead of just throwing it on credit, or, hey, my mortgage is so low that, I can, do it, not only do what I want, but, I have a little bit more free, leeway. I think making your housing payment as the primary focus in your financial life, I think is a mindset that might have to change a little, but I think outside of that, I think people will just start to feel a little bit more comfortable, and I think we'll get to a point where.
And the markets are cyclical; they're going to keep changing on us, and it's just a matter of, hopefully you can never time the market, but being comfortable and then hoping for an opportunity to come, every couple of years to reduce cash out refinance.
Sure.
Just a traditional refinance to bring your rate down, or whatever it is.
Yeah.
There's always products out there. Pay your mortgage for 10 years, then refinance the debt into a new 30-year, and you may bring your payment down a little bit and have more free-flowing cash flow. So
absolutely,
there's always opportunities in buying. Adam, thanks for joining me today. Great conversation. I'm going to go find a piece of dirt, and I'm getting ready to build a house.
You're hyped up.
I'll see you soon.
All right, bud. Thanks. Appreciate it.